Welcome back to another stock market open live stream. Woo! We've got some data coming out here shortly, and it is exciting to cover it as always. We are not only going to cover some of the morning information here, but we are at some of the 5:30 data that we got, including ISMs that are coming out within about, quite frankly, like the next 10 seconds or so. Then we're going to get into the JOLTS data that comes out at about 7 a.m. So we'll go a little longer today so we can cover the economic data that comes out. All right, first thing though we have is ISM data, including prices paid, manufacturing, employment, new orders. That's coming out within, well, actually, that's also coming out at 7 a.m. So it's not a 5:30 data release for ISMs either. So ISM and JOLTS data, all of that is coming out at 7 a.m. So we've got a little bit of time to go before all of that data. No data at 5:30 in the morning, which is kind of boring. But we did get Barkin. Apparently, Barkin's yapping somewhere. Richard Feds Barkin says U.S. central bank making real progress on inflation while economy remains healthy. Barkin notes that 6-month core personal consumption expenditures inflation is now just below the 2% target. This is somewhat similar to the PCE we were talking about yesterday, where the multivariate core is essentially below or right around 2%. So remember how I've been looking at the multivariate core. So we look at multivariate core inflation, which basically gives us a graphical representation of PCE. And Barkin, speaking this morning, is referencing this, which is really interesting. He's doing this on Fed Minutes Day. But I think that means he's essentially looking at this multivariate core number. So let's just disable goods, services, X housing for a moment. Puts us right here, multivariate core trend 0.52, which is interesting because, yeah, I don't know that that's exactly on a 2% trend here. It's certainly come down, but I don't know that top level or high level multivariate core is down all the way at 2%. If we look at some of the parts, you see that a little bit more. But then again, he's talking about PCE. So if I go back to, let's see, 12 like Christmas. So let's go back to, I don't know, 12, 20, 23. And let's get to PCE, which actually came out on the 22nd. So PCE was deflator 2.6 on the year-over-year level, month-over-month negative 0.1. That's for the headline numbers. And then year-over-year core deflator was 3.2. So I guess I don't understand. Okay, Barkin says 6-month core PCE, just below 2%. All right, interesting. Barkin says, you can see the case for soft landing developing in the data, but it is not inevitable. Okay, that's a weird double negative. It's basically like he's saying, hey, it's not certain we'll hit a soft landing, but you could definitely see the case for it now. Okay? Barkin says risks to the soft landing include delayed impact of high interest rates. All right, that's interesting. So delayed impact of high interest rates, and then potential for additional rate hikes remains on the table. Yep, we'll see them say that forever. Honestly, we could be back at 0% rates, and they'll probably still tell us that additional hikes remain on the table. Barkin does not specify policy path, suggests less focus on the path of rates and more on whether inflation continues to fall. Barkin says conviction on the path of inflation and economy will determine the path and timing of changes. And that's it. So that's interesting. Nice little start to the day with, I suppose, the Federal Reserve. All right, so that gives us a little bit of Barkin. At the same time as we get data here on Barkin and we wait for JOLTS, we do have futures negative at the moment. We've got Dow, S&P, NASDAQ futures all down in order. 25 basis points, 36 basis points, 54 basis points. You've got the 10-year yield almost back to 4%, sitting at 3.96%. 7. That's about 17 basis points higher than some of the lows where we were last week. Then at the same time, let's take a look at what's going on with break-even expectations. Try to get a little bit of color on this. You go jump into the 5-year break-even, 2.2%. Nothing too unusual. All right. The suits are saying this week's data coming out at 7 a.m., including ISM and JOLTS, will give us an early read on the 2024 recession. The evolution of soft and hard data in 2024 will give an indication of if and when the U.S. economy is likely to slip into recession. Something stocks near all-time highs do not yet have on their radar. A recession. Yeah. Well, that is fair. That is fair. All right. So, recessions typically occur when both hard and soft data begin to reinforce one another in a negative feedback loop. Hard data is contracting, but appears to be stabilizing right now, while soft data has started to enter a downturn, but remains elevated. I could show a chart of that. Let's hold up. That's really interesting. They're really arguing that the contextual move really on both of these is towards a recession, but not suggesting we're there yet. If you haven't seen yet, yesterday I came out with a little warning from one of the earnings calls, Paychecks. I thought that was a really interesting one because really they're making this argument that, hey, we're definitely seeing a softening in labor, and we're potentially seeing a softening so much to the point that all of a sudden we're not getting any seasonal hiring anymore. And this is really weird. So that's Paychecks. They're a payroll processor. I really like looking at the payroll processors to try to understand what's going on with labor because they just see so much of it. So that would be something that you might consider charting as well. Anyway, the idea of recession is usually when both of these soft and hard data indicators turn negative. So when you go under 0, and then you really start going negative for both of them. Look, for example, 70s, 76, 80, 82, 91, 2001 to 2003, 08 recession. Okay, so what did we have in the 08 recession? The joined falling of soft and hard data. Jump on over here. What do we have? We have the falling of hard data, but not quite, frankly, yet the falling much of soft data, although you do have some turnover of soft data. Now, where has that happened before? Well, quite frankly, look over here at like 2015 to 16. Both of them went negative, but no recession. Look at, let's see, where else have we seen something like that? Maybe the mid-80s, 86, that's weird. You had some soft data going somewhat negative here in the mid-2000s, but not hard data. It's really when both of them go negative, that's when you have recessions. And it doesn't look like we've had a case where both of them have been negative without being in a recession. We've had one of them go negative without being in a recession, but not both. And right now we've got hard data negative, soft data not. All right. Ooh, Goldman. Goldman says stacks, stacks. Goldman says, I'm thinking about Stack Hack. You know, we do financial advice I don't really pitch it much, but we do financial advice, sort of like consults for folks. Stackhack.com. But anyway, Goldman Sachs says cash on sidelines will fuel January stock run before it fades in February. Investors last year kept their cash mostly on sidelines, even as the market rallied more than 20%, and so stocks could get a boost in early 2024. as those investors deploy that dry powder in equities, according to Goldman Sachs. Yeah, I think as you get dips in the market, you attract money off the sidelines. That it's very, very difficult to attract money off the sidelines when you're at all-time highs. But it's substantially easier to attract that money off the sidelines when, you know, that money is sitting in the juicy money market and the market has a little bit of a dipply-doodlah. You know, I don't know, Apple falls 3%, things downtrend a little bit, which may have happened yesterday. And let's see what we got here. Look at that. Tesla actually ended up positive yesterday by 58 basis points. However, it's a negative 1.23 today. Costco ended up down 1.43. Let's go. Short. S&P down half a basis point yesterday. SoFi down 3. Down 6.7% at pre-market on SoFi. Wow. That seems extreme. Let's see what... that could just be low liquidity trading. You have to keep in mind, pre-market, yeah. There was a price cut. KBW. Whomever that is, they cut SoFi to underperform yesterday. And they have a price target of $6.50. And it looks like an insider sold $550,000. Chief Technology Officer Jeremy Richel reported an insider stock transaction. Okay. Big deal. $550K. Whatever. Alright. Still waiting for data. But again, we'll be waiting until, quite frankly, for about an hour and 19 minutes for that data. So, what else are the suits saying? Did Santa's Ooh, somebody's saying affirm in the comments. Let's find out. Ooh. Okay, that, you know what? Ha 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 ha. Fairly reasonable investor here says, insiders matter. Yes, insider matter. Insider lives matter. Anyway, this is really interesting. So yesterday we were talking about shorting a firm. And mostly just because the chart is, like, ridiculous. And, like, you could like a firm and still short the frickin' thing at this point. It's so stupid. The chart. I would just look at it. It's the stupidest chart ever. So, like any child trader can look at this and go, yeah, that looks shortable. Anyway, so we were talking about that yesterday. It ended up dropping. I think we started talking about that when it was down like 2.5 or 3%. It ended up down 5%. It's down another 4.6 in the pre-market. We'll see what happens today. And then, of course, you've got the insanity of what's going on in the Red Sea. Let's look at Zim. Look at that. Up 2.5. Yesterday, oh, of course it was. Yesterday it was up 13.37. It was up elite 13.37%. Yep. Talked about, in a weird way, yesterday, day trading that one long when it was up like 5%. So that's up another, boy, that's up like another 10% since we're talking about it. Interesting. So we'll see how that momentum moves. This stock trades entirely based off what's going on in the Red Sea, which is really interesting because Libya oil protests are forcing a partial reduction in output. Fine. But oil yesterday rose on Red Sea drama, yet today it's also positive. But yesterday it actually closed the day negative. Yeah, that was crazy. I was not expecting them to go negative, and they did. Like, they went from positive on oil to negative yesterday. I thought that was wild. What else is going on here? All right, so let's look at some of the moves yesterday. So here's Rivian down a whole 10%. It's got another 2% to go here. Wow, look at this sell-off on Coinbase. Bro, I've been wanting to short this when the ETF gets approved. Why is it selling off beforehand? I think the run in this stock is insane. I'm not saying eventually it might not be justified, but I think they just priced in like 10 years of ETF gains here. Because I think trading gains are going to be very thin on this one. In fact, what was I talking about just the other day here? Yes. So I got a message from Kathy. Good old Kathy Wood. We're talking a little bit about the BTCs, the good old cryptos. And one of the things I thought she said that was very interesting was, we're now competing with people essentially in a market who don't understand how profoundly Bitcoin will transform the financial world, but who are willing to basically work Bitcoin at no fee, essentially. So this frustration over essentially the old guard coming in and trying to take from the innovators. Very interesting. Okay. Looks like we got 94,139 China-made electric vehicles in December. Not bad. 68.7% jump compared to the same time last year. Very cool. Then we've got... Let's see here. Trying to explore a little bit on what is going on. Oh, wow. BTC 2. Look at that. It's just now falling. Oh, wow. Look, dude. Okay, I tell you, people make fun of my lines. But what the hell is that on the screen? I can't make that stuff up. I go to the 5-minute chart, it's like freaking perfect. That's scary. That's weird. But anyway, you want to draw the line too, you can as well. That line's at 42,254. But anyway, yeah, it's up here in no man's land. Up, right back to the line. Almost perfect. But I mean, it's basic TA. It's not. It's not like, oh, really that big around here. I just say it because there are still, I still see people in the comments like, oh, well, TA's just magic. It doesn't work. Okay, bro. Okay. Anyway, so here's BTC selling off as well. Yeah, I think that's really interesting, given that we're not at that BTC approval yet, but for an ETF. But I do believe an ETF would lead to a short-term sell-down in Bitcoin and Coinbase. But both of those are starting to happen before the approval. I mean, look at this. Down 9.8% on Coinbase with another 6.8 in pre-market. Wow. Interesting. All right. In the meantime, looks like somebody decided to bomb the Iranians. 2 explosions were reportedly caused by bomb-laden suitcases. Blasts hit the gathering anniversary of Soleimani's killing by the United States. 2 explosions near the grave of Iranian commander Qassem Soleimani. I don't know why I'm saying his name like that. But anyway. Killed at least 73. Wow, that sucks. And injured 171. Boy, that's a lot of people around for a funeral party. State TV reported describing the blast as a terrorist attack. The blast happened within 15 minutes of each other. Oh, it's one of those where one bomb goes off and you know, the people try to help the other people and another bomb goes, those are the worst. The blast happened within 15 minutes of each other outside the graveyard in the central province of Kerman on the anniversary date of Soleimani's death. and cited the area's deputy governor, calling the explosions a terror attack. Surprised it wasn't a drone. The attack comes less than 24 hours after the suspected Israeli drone strike. There you go. That killed a senior leader of the Iranian-backed Palestinian military group, Hamas. Right, but wasn't that in Lebanon? I think that was in Lebanon. I was reading about that yesterday. There was basically a Hamas leader who was killed in Lebanon. And so this article is basically trying to imply the potential for Israel to be behind both of these. And Israel trying to basically, in cahoots with the U.S., of course, sending a middle finger to Iran. It is entirely possible that stocks sell down when you get Middle East uncertainty. 110%. All right, let's listen to here for a moment.
Manufacture these chips knowing that the Western powers, the United States and others, are beginning to starve them of the chips that they want.
Yeah, and some of the China bulls say, look, the Chinese government has so many more tools that it can use to stimulate growth. It can deploy the central bank more. It can perhaps start to fund local governments more. I'm starting to wonder whether it's just not a policy priority right now, or more importantly, they just can't. They don't have the financial room right now to stimulate. What do you think the government's ability right now is to help stimulate growth, and can we look for more of that this year?
You're going to see more measures by the central government to stimulate the growth. But part of the downturn is caused by the world recession and the slowdown of the world economy, because China is still heavily dependent on exporting their manufactured goods all around the world. And when there's less demand in Europe or the United States, or because of the tariffs, then China produces less. And if they produce less, they don't need as many workers, and that's leading to the high unemployment. Nonetheless, China does have some tools within its toolbox, but the problem is that the private sector now in China is reacting to being whipsawed by the actions of the Chinese government. First, encouraging the Chinese companies to innovate, to go bold, to expand, and then the Chinese government and officials will say, oh, what? We don't like what you're doing, and then they're reining them in, which then causes loss of investor confidence in many of the sectors of China.
Yeah, we saw that 180 with the video games policy, which they imposed and then pulled back, and then the official that was in charge of that.
Yeah, but he's more talking about like the 3 red lines policy in real estate, not the gaming issue.
Look, Ambassador Locke, thank you so much for joining us. We appreciate it.
There's that 24-hour thing again. Yeah, anyway, that's very interesting. So, okay, good. So what else we got? Well, we've got data coming out here shortly. That's going to be really entertaining. I love it when the data comes out. But still got over an hour to go. Oh, no. Before the data comes out, which is kind of wild. Oh, there we go. Okay, yeah. Okay, but geopolitical tensions will certainly, I mean, lead to some kind of trade down in stocks. This is very, very normal. And now that you've got, apparently the suitcases I was reading, this was in Iran, I want to be clear about that, by Soleimani's grave. They were planted in the ground via 2 suitcase bombs. But I mean, to kill like 70 people? Boy, man. Either those people were like packed super tightly together and the bomb was like perfectly planted. Bomb has been planted. Or I don't know, like, and then you wonder, like, oh, it's a graveyard. Maybe it makes sense that there's this fresh hole here. I don't know, man. Like, I kind of wish there were a picture of before, of like, oh, see this fresh little mound of dirt here, like you're doing a quest in World of Warcraft, and it's like, see this just recently unearthed dirt that's not under a tombstone? Maybe that's a red flag. Like, I don't know. Like, I would love to see that. I think as humans, that's like human nature. I'd like to know what a bomb looks like so I could not go there. Or the other alternative is just don't go to Soleimani's grave, which is probably the point here. That, probably the good old C, the A, and the A is trying to accomplish. Not saying the U.S. would ever be involved in bombing anything. All right. So, but anyway, geopolitical strife could certainly contribute to some of the turmoil that we're seeing in stocks this morning. You've also got Ukraine attacking Belgorod, which is in Crimea. And, I'm sorry. Screwing this up. I'm thinking of the port. Ukraine attacked Sevastopol, which is in Crimea. They also separately attacked the Russian city Belgorod. So let me separate those two statements. In basically attacks following the Russian drone attack, which is really interesting because remember that the Iranians decided to build a drone factory outside of Moscow to help Russia use more drones in their attacks against Ukraine faster. And I thought it was so weird when they were talking about this relatively early in the war, like, oh yeah, we're going to build a drone factory. I'm like, is the drone factory going to be done by the time the war still needs them? Yeah, apparently this war has lasted a little bit longer than everybody expected, in Ukraine at least. All right, so then we've got Outback Steakhouse's parent company announcing that it added 2 members to its board. Wow. Some activist board leading the company stock Bloomin' Brands to actually rise 5%. Why? Who cares? I don't know. All right. Jump back in over here. Verizon? I don't know. Do I really care?
Price target of $45.
And who is this guy? Where's Becky Quick?
Paid wireless subscriber and broadband subscriber growth as well, Becky. So Dow component Verizon, 1.75% upside. I'll send things back over to you.
Okay, Don, thank you very much. Joining us right now for more on the broader markets is Carol Schleif, BMO Family Office CIO. Carol, you've got some pretty interesting thoughts. You think that the market right now is being overly aggressive in terms of how many rate cuts they're going to get from the Fed, but you also think that this is going to be a pretty good year for equities. Do you care to explain? Because most people are in one camp or the other.
Yeah, let's hear it, lady.
Yeah, we do think the market got ahead of itself with the pretty exuberant Santa Claus rally in the final couple of months of last year. And especially, I mean, the market right now, the futures market is looking for something like 2 times the number of rate cuts that the last dot plot showed, and initially starting as early as March. We think that's a little overdone, but we do think the Fed's done raising. We think it'll be overall a constructive year. And once you get past this digestion, if you will, of the strong final finish to 2023 we had, that you will see a pretty constructive year as things settle in. We still need investors, especially in the fixed income markets, to get used to the fact that we're probably not going back to a 0% neutral rate for fixed income, that 10-year rate is probably going to hover more likely at 4.25%, 4.5% when all is said and done.
But you're looking for decent gains. You think the market just moved awfully quickly, but it's not necessarily overvalued. It's just maybe going to take time to digest it?
Exactly. We think you'll get a lot more clarity in the next couple of weeks as we start to get into earnings season. We'll also get more clarity as we see how the consumers survive the buy now, pay later, and all the credit card bills and the higher rates that happened at the end of last year. As we see how that consumer progresses, we also will get some clarity on the employment market, not only short term this week with the JOLTS data and the labor data and the employment data on Friday, but also in terms of company plans that get revealed as earnings are announced in terms of are they retaining employees? Do we start another round of layoffs? How does that health look? So we think there's some digestion issues early in the year, but that it moderates out later in the year because you still
Meaning what, you would tell people to buy on dips or something else? Because it does sound like you're unclear on some issues.
No, sorry for sounding unclear. Yeah, that potential to buy in dips, but the potential to buy in dips, particularly as it relates to fixed income markets, as we see those yields move up a bit. You've got an awful lot of money that's sat in pretty comfy cash in the last year or so that was yielding 5%. But once we do start to get those cuts, those 5% cash yields are going to come down pretty rapidly, and then that will be looking for another place to go. So buying on dips in the equity markets, buying on dips in the fixed income markets, and dollar cost averaging in makes a ton of sense.
Okay. Carol, thanks a lot.
Thank you.
Yeah. Okay. I don't know I got much out of that one. Okay. Buy the dip. Yes. Yes. Get that money market cash off the sidelines. Here's a juice one. I saw somebody in the comments talking about this one. S-Bucks. Boy, I've been waiting for this sucker to come down, and it's finally coming down. Now the question is, how low do I want it to go? So here you go, S-Bucks. Look at that on the Fibbies here. Got some delicious movement down. We are almost as low. Let's see here. This is our 2022 era over here. Let's go out a little bit more. Let's go out to the week chart. There we go. Okay, look at that. So we're mid-range on the Fibbies for this sort of recessionary correction that we've had. And so we're midpoint over here. And we're just recently coming down, sitting around 93.59. I don't know. For me, I probably got to be like 80 to really consider S-Bucks. I do think what's fascinating about S-Bucks, which people don't realize, which doesn't matter right now much because, well, China's in the pooper doopers, but they doubled their China store exposure. Doubled, which is like, that's a feat. They did that during COVID, during the COVID lockdowns, which is wild because it's kind of brilliant. It's like, oh yeah, what are we going to do during the lockdowns? Well, let's just go build a bunch of stores, and if we build it, eventually they'll come when essentially everything reopens. Well, I mean, so far that's not proving to be the greatest bet, but then again, China's basically in a recession. So I do think that Starbucks has a very interesting potential China exposure. China. Nobody knows. All right. I do want to know what percentage of their current income comes from China, though. I'm a big fan, and I talk about this in, like, for example, the Gold course or the other courses I'm building with. I don't think, and I've seen other, investor types talk about reading, like, annual reports or financial reports. In my opinion, they do it all wrong. I'll just give it to you right now, okay? They have this idea that, like, you're supposed to sit there and read a 100-page earnings report. It is the stupidest thing ever. Nobody's going to do it. Just the idea of you doing it will lead you not to do it. I am a big fan of what I call active reading. I look for questions that I have. I do that in earnings calls. I do that in earnings reports. It's very, very useful. So anyway, all I'm going to do is go to the latest report from Starbucks, which is very convenient that it happens to be an annual report. And then I'm just going to type in China. And then we're going to see, interesting. Total stores open in North America, 10,200. Total stores open in China, 6,000. They have 18,000 total. 30% are now in China, which is a doubling during COVID of the China stores. So now I need segment revenue. So let's find out. International segment is a significant profit center of our global returns. In particular, China contributes meaningfully to both international net and operating income. China is expected to be our fastest growing market in terms of percentage growth and our second largest market overall, with duh, because you have so many stores there. And 100% company-owned stores in China. Due to the significance of our China market for our profit and growth, we are exposed to risks in China, though. Well, duh. If the government shuts y'all down, you got a little oopsie-doopsies. Or, if they happen to be in a little bit of a depression. Okay? So, now I want segment revenue. Let's find out. See, I find that very interesting. Okay. Now, can I get segment revenue? Why, yes, I can get everything I want. Anything you want. What do you want, Kevin? Here you go. Wow. It is way crappier than I thought it would be. What? What, this is trash. Huh. Never mind, it's trash. Okay. Wow, I want to show this up on screen. Okay. So, look, I know that China's in like a little bit of a poopy doopies in terms of, you know, recession or depression or whatever you want to call it, because the Chinese Communist Party certainly isn't going to tell us about it. But they have like 30% of their global stores are in China. Okay. How much of their revenue, oh, hi from Singapore there, how much of China, Starbucks' revenue do you think comes from China when 30% of their stores are in China? I'll let you think about that for a moment. I'm doing the math for it really quick. All right. The answer is 8.5%. What the hell? Yeah, that's really low. So that's interesting because it basically says even though they doubled their stores in China and they have 30% of their stores in China, you don't actually have a lot going on in China from Starbucks. That's low. I was not expecting that at all. So yeah, pretty wild. That's crazy. That is yeah, information on geographic area by in millions. There's October 1, 2023. It's literally flat. I mean, basically flat from 2022. It's actually down from 2021. Wow. All right. Well, that was unexpected.
Talk about rate hikes. Yeah. I mean, we do have a downgrade today of Sherwin-Williams.
I saw
over
that.
At Bayer.
I'm hearing from some Chinese that I know that S-Bucks is not very popular. There's also that risk. You know, you could always go for a fraud like Luckin Coffee instead.
Oh. That's heresy. You can't get
That's heresy. It's perfect timing.
Apple, but you come back and you just say to yourself, all right, if you're going to take out the stocks that are not that are
Ellis, that the chart was actually for the first 5 days of the year, so not necessarily for the just first day. It was the first week. And somebody's asking what's on my mug. Oh, you probably work here. It's StreamYard. Make sure to go to metkevin.com/StreamYard to learn more about professional multi-streaming software.
indicative of our nation.
Paid promotion.
The billionaires row.
Yeah.
Somebody here says, I live in Shanghai. Luckin Coffee is great. So are their books.
Take something off the table.
Yeah.
How is that?
They're really good at roasting and cooking.
The other day,
Bad joke.
32 consecutive overbought closes to end 2023.
Well, yeah, 9 weeks up. We have to go back since 2004. These are not the stuff which just says, you know what, we need another big week. I think these are the stuff to say, okay, let's reshuffle the deck for a while. Let's maybe take some profits. One of the things that's happened is that the term "take some profits" has suddenly become heresy. And I was going back and forth this with Larry Williams, who's the oldest and smartest historian technician I know. And he was saying, Jim, you're not a trader if you decide that you want to take profits for the first time in years. That doesn't make you a trader. And I felt myself, wow, I felt tremendous pressure not to sell any of the Mag 7, which is ridiculous. I mean, these are the greatest performing stocks of all time, and I'm like saying, let it ride? It's like, you know, Dostoevsky, hey, listen, 0 in The Gambler. Let's just go and get it again. It's been such a great run. And by the way, if you look from November, right around the November meeting, the stocks that have done well, it's JP Morgan. That's what's moving things, and it's the Vanguard High Yield Fund, where JP Morgan is 3.3%, is the largest in the thing.
Yeah. All-time high yesterday.
All-time high. Not, you know, it wasn't, you know, we did not get an all-time high from I'm going to say it, NVIDIA. We did not get an all-time high, but we got it from JP Morgan. I mean,
yep, it's not true, not untrue. Here's JP Morgan on the chart. What's interesting here is I think as you're seeing pain in the bank term funding program, which you did see a pop off in the bank term funding program. In fact, we talked about that on eHack. Let me pull it up right here. eHack.com. Look at that. eHack.com. We got some Fed talk right here. China talk right here. Putin. Single family home shocker. That was a really cool one. There it is. Look at that. Bank term funding program. 20% increase in the last 30 days. Oh no. What's going on over here to the right? Well, you know, I'll just give you my little conclusion on it. And you could get all this stuff at ehack.com totally for free. I also added these little links, which I think are kind of cool, because you could basically now, like, I don't know, it's just anchor text, okay? I'm not like a programmer. I know this is really intense and like really impressive. But like if you open like a private browser and you just, you know, let's say you wanted to share that link. Oh my gosh, it goes right to that spot. You've probably never seen something that innovative before, that you could link to a spot in line in a page. Yeah. I'll talk to you all day long about the HTs and the M's and the L's. But anyway, so bank term funding program, I personally think that this creates very, very little concern level, mostly because the Fed will probably just extend the program and let banks have more time to pay off their debts. So I don't see this as a big negative catalyst, mostly because the Fed cannot justify any kind of banking crisis at this point. I think that's highly unlikely that you have a Fed that's interested in allowing any kind of banking crisis. So, however, I do think as this bank term funding program has been rising, you do have companies like JP Morgan performing better, potentially as there are some increased risks. And you can see that. I mean, they've done very well in the November rally here. This is the week chart. They really had their last weakness, though, the middle to end of 2022. And since then, they've basically been up. So good for them. You got to give them that. Oh, fascinating. All right. What about this here? Here's some soft landing talk from the good old world of research. The good old world of research. How much did your developer charge you for that? 0, baby. Because your favorite web developer ever programmed it all in. It's not even programming. Meet Gavin. Decided it all on my own. Implemented it all on my own. Anyway, what about equities? You always hear pundits in the media say the equity market is fully priced for a soft landing. This is from T.S. Lombard, by the way, the good old resident bears. On the surface, this appears to be true. Earnings expectations for the S&P 500 look optimistic, they say. On the surface, this appears to be true. Earnings expectations for the S&P 500 look optimistic, with EPS forecast to rise at a double-digit rate in 2024. This is not what we would expect in a genuine hard landing scenario. Well, of course not. Recessions typically come with a large decline in earnings. Well, yeah, that would make a lot of sense. And of course, valuations are not cheap. So it's easy to imagine a bearish outlook for global stocks, where earnings disappoint. Yeah, you get a recession. Totally makes sense. Mostly, that's why we want to pay attention to that jobs data coming out today. Because remember, the JOLTS data comes out in 47 minutes here, and we're going to get some interesting insight. Anyway, on this same logic, there would not appear to be much upside to global equities, particularly if the hurdle for rate cuts is higher than investors think. But an interesting story is hidden below the surface, in the continued divergence between the Magnificent Seven and the rest of the global market. While the S&P 500 rose significantly during 2023, the so-called Magnificent Seven accounted for the vast majority of the gains, which is basically just the Magnificent Six. You can cut Tesla out of that. Was this really a market price for a soft landing, or was it in fact just a view that these 7 stocks were special immune to what was happening in the rest of the economy. Well, frankly, everything else is probably like your AI investment, right? Cloud services and AI, maybe hardware related to, new hardware with your new neural net processing chips or whatever, the M3 chips and otherwise from Apple, NVIDIA, Meta. I mean, these are obvious AI plays here. AI in advertising, AI in compute. And then, of course, we have Microsoft with AI in data center, exposure to GPT, whatever. Tesla's a less clear bet on AI, even though I think they have the most realistic form of AI that exists. But anyway, the idea that Magnificent Seven are recession-proof has always made me feel slightly uneasy. Not least because people said the same thing about the Nifty 50 in the early 1970s, and that didn't work out too well. Those stocks substantially underperformed for more than a decade because even with the strong earnings, they couldn't match wild investor expectations. But if you believe in a soft landing, which seems to be the way the world economy is evolving, the opportunity is clearly to be found in those parts of the market that are still pricing in significant recession risk. Small cap, real estate, banking, and anything else that's rate sensitive. What's rate sensitive? Well, you know my favorites. Come on. Or value sectors. Okay, so rate sensitive, Enphase Tesla, value, Intel, particularly outside the US. Could it be? What could it be outside of the US? Ooh. Could genuinely outperform if a recession is averted, and the soft landing thesis is confirmed. The 2023 gap between the Magnificent Seven and the rest of the market has already started to narrow, thanks to the festive Santa rally, which saw small cap stocks outperform. But this trade could have further to run in 2024. Ooh. Large parts of the market are still priced for something nasty to happen, so a more nuanced approach to stocks might be helpful. Fascinating. All right, let's keep looking here. What we got?
For instance, James Corman won't be independent. I mean, this is the only board he's serving on. Anyone who worked with James or has interviewed him know that he's owned by nobody. I mean, it's just he does not play for dinner. My problem is that I still feel that because the company is doing so poorly right now, or the stock too, why not have the guy with the most stock on the board, Nelson Peltz? But they just made these changes, and I think that Value Act coming out in favor of the changes, the Gorman move, is going to be dispositive about what will happen.
You mentioned some of the challenges, certainly in direct-to-consumer, but the studio side as well, Jim. For the first time in almost a decade, our parent, Comcast, beats Disney at the annual box office, thanks to Oppenheimer and Mario Brothers.
You know, that was one of those where it was like, I was with my staff this morning. We said, you got to be kidding me. We beat Disney? But then we said, well, Opco was good, and people saw it was Super Mario. It was like, it was very accessible that we did well. Of course, we worked for them. Very accessible that we did well, and Disney was not. Like someone this weekend was saying, look, Disney did great. It was Barbie. I said, no, that was actually.
You're right, exactly. Although I would say UBS names both Disney and Netflix as top picks for the year.
Well,
yeah, whatever. All right, this is interesting. Green transition finance will take center stage in 2024. Do I hear Enphase? Let's read it. Transition finance is shaping up to be one of the year's most important subjects for anyone professing to care about climate risk. There's a whole world of transition finance being created as we speak. The conversation has matured from talking about investing in climate to investing in transition. Okay. This all has to do with ESG stuff. It's basically a different way of talking ESG. All right, whatever. Okay, so we talked about Barkin. I mean, we did talk about Bitcoin and Coinbase, but let's see what this is. A slump in Bitcoin on Wednesday saw the cryptocurrency erase almost all gains it made in the first few days of the year, bucking a long-running upswing. Okay, that's fine. We saw that. Saw a move back to the Fibbies. More than 500 mil across all cryptocurrencies have been liquidated so far, according to CoinGlass. Yeah, it's always interesting to see the wrecked charts. Let's look at the current. 1 hour wrecked, 24 million for longs. 4 hour wrecked, 523 million. Wow. That's most of the 24-hour wrecked. Because the 24-hour wrecked is 589 million of longs. The 4-hour wrecked is 523. So people are waking up to oopsie doopsies. And a lot of these actually happen on OKX. A lot of these liquidations. It looks like 46% of the liquidations are occurring on OKX, with actually only about 26% occurring on Binance. RIP.
Elliott. Right. But most people, when Elliott comes in, they say, Although I have Constellation Brands, which reports soon, and my Chapel Trust on it, I felt clarion call when they said, Elliott, help us. Help us.
Yeah. Well, it worked for Salesforce this year,
Yes,
last year.
it did. Salesforce.
Anyway, sounds like they're going on a break. So, okay. So we still got a red market. If anything, it just got worse. We're now at negative 42 bips on the Dow, negative 50 on the S&P, at negative 69 basis points on the NASDAQs. Yeah, look at that pre-market on the NASDAQs. NASDAQs, there's no S. Anyway, here's your hour chart. Here's your pre-market. We get the sell down. Look at that hour chart. It's like, oh, hello, all-time high. Goodbye. Breaking right through that 406 level. Let's see when we lost that. When we lost 406 right here, straight down. So does that mean we're going back to 373? Oh no. Alrighty. Let's find out what else is going on. So let's see. We've looked a little bit at what the good old Bears TS Lombard have to say. I don't think anybody here really cares about what's going on with Harvard, so we're going to ignore that. A bunch of people here talking about how unpredictable the 2024 economy is going to be. Yeah. Jobs, baby, jobs. Talk about the now more than 100 dead at Soleimani's grave. Sounds like that number went up. Can we get video of that? Oh, I think we can. No. Explosions went off in Kerman as people gathered. Oh. All they show is like a camera shaking a little bit. There's actually a lot of people out celebrating this, so it is pretty crowded. Anyway. So, yeah, more geopolitical strife, though. Not great, especially following... I talked about this a little bit yesterday. And on eHack as well, eHack.com, we talked about this a little bit. And right here it is. I talked about how frustrating it is that, America comes to escort container ships. And even with the American military escorting them, the companies are not comfortable enough to be in the Red Sea. That's bad. That just feels like a failure on our part. It's like, yes, you're good. Oh, sorry, you weren't good. Yeah, I don't know. It's somewhat disappointing. eHack Deck, yeah. I'll be posting more throughout the day. All right, let's get to Suits. Gold solid end to 2023 gives way to headwinds. Gold ended 2023 in a wildly optimistic mood, setting a record high on haven demand as the situation in the Middle East deteriorated and buoyed by the expectation of lower interest rates. Yeah, you get your currency traders that move into gold sometimes. So let's find out what gold's doing right now. 2,045. So it went you know, over 2,000. It's been sitting at 2045 for a while now. All right, fine. Go ahead, Jimbo. What do you got about Amazon?
I sat down with last year is talking about the opportunities for a lot of upside. So you get rid of Amazon and you switch to General Mills. Then General Mills reports and people say, oh, Blue Buffalo, I don't know, there's competitive dog food. There is no competitive dog food to Amazon.
I mean, they do have competition in cloud, but would you argue they're best in class? I mean,
yes.
Really?
Yes,
What?
I think they have the least expensive, most robust cloud offering. They also were the biggest adopters of what NVIDIA's selling. By the way, Meta, huge adopter of, and people don't understand. I remember when I spoke to Jensen Huang, he says he speaks to Mark Zuckerberg constantly. And sure enough, the Ray-Bans are filled with AI. I mean, I wear Ray-Bans. My Ray-Bans don't do anything. My daughter's Ray-Bans are like taking pictures for Instagram. She's listening to music. She's messaging me. And mine, well, like they block the sun.
Like old school.
Yeah.
Keeping it real.
I got them at Costco. I mean, like I block the sun and I saddle them.
All right. Enough of this. Barclays has some employment previews for us. Oh, that's a cool little setup they did there. That's on the exchange floor. I think that's the back. Is that the back of their desk? I don't know. It's kind of cool. All right. Barclays, what do they have to say? We forecast non-farm payroll coming in at 175,000 in December, slower than the 199 gained in November. That's pretty in line with consensus. That's not that big of a deal. This week also features the JOLTS report. We think that the job openings report came in at 8.73 in October. Wait. Rose from 8.73 to 9 in November. Oh, so Barclays thinks that JOLTS number, which is coming out here in about 34 minutes, is going to come in stronger. All right. That's an interesting little preview. We'll see. Yeah, as long as it doesn't get crushed. The last thing we want is for it to get crushed. Here's another employment piece. Crédit Agricole. The end of the holiday period leads into a busy week, highlighted by the December employment report, minutes from the Fed, ISMs, and JOLTS. Fed minutes tend to be dated, but we'll be particularly interested in the minutes from the December's FOMC, given the surprising nature of Jerome Powell's dovish pivot. Yep. Current base case for Crédit Agricole has the first rate cut coming in July. And they're looking for the jobs report this week to come in at 175. For the JOLTS, they are taking an in line with consensus view. Oh, that's boring. You know, if everybody's just in line with consensus, it's so boring. There's less entertainment then. Oh, well. Boring. All right, what else? So, let's see how Coinbase continues to behave in the pre-market, or should I say not behave. Going. It's down about 7% in pre-market. You know, I will say, I'm a little pissed because I've been waiting for the ETF approval to short this sucker, and I didn't think it would go down 17% in a day before the ETF approval. But then again, I suppose it doesn't surprise me. It's, you know, people trying to front run the end of that period of time where that ETF could get approved. And if it gets approved, the stock goes down. If it doesn't get approved, the stock probably goes down. So maybe that's what people are seeing.
At a majority now of U.S. gas stations, Jim, even as we look at more reports today,
$3.
Just looking at how OPEC, they can't cut fast enough to keep up with this non-OPEC supply.
Yeah, look, I just don't think people understand, including the people in the Permian, that they're just producing so much. I mean, we're now the largest producer, 13.5, probably go up another 300 100,000 if we want to. Canada's got tons. They just need to. They need a certain kind of chemical to make it so that they can flood us with gasoline. And I don't think it's the demand side. I mean, Tesla, obviously, a good note by Adam Jonas about the strength of Tesla and what they have. And he does the sum of the parts analysis, which is, I like his work. I think it's just very valuable.
Yeah, he argues that stock's going to be valuing a company that relies less on cars over time.
Okay, so where I was going was Tesla energy is important, Tesla insurance. So it's not a question of there's a sudden lack of demand, but the supply is just so humongous. And I don't think people can understand that we have the capacity to do far more than anybody thought. And then once Exxon completes its deal with Pioneer, oh man.
Not just that, U.S. has now overtaken Australia and Qatar as the #1 LNG exporter.
That was never supposed to happen. Never, ever supposed to happen. And I know there's a couple people who recommended Qatar today, which is Chapel Trust owns. That's the old Capital Oil and Gas.
Okay, that's actually more green than it was yesterday. I don't know. We were like even more red yesterday. But there are rumors that the Bitcoin ETF is going to get rejected. Again, it's like, in my opinion, it gets approved and goes down. Gets rejected, it goes down. Just because there's been so much enthusiasm and hype built in. But anyway, yeah, here's your Coinbase. It actually looks like it's trying to recover a little bit. You can see right here, it was down 7%. It does look like it's trying to recover. Getting a little bit of a green candle there on Coin. Still down about 6.5% right now. On the NASDAQ, looks like we're trying to get a recovery here. Tesla, trying to get a recovery. Starbucks, not really doing anything. Zim, drop in. Affirm, Affirm's trying to go green as well. Ooh, Enphase down 3.61. Rip. At the same time as SoFi down 7%. Wow. Rivian's down about 2.84. Nvidia down about 1.6. Intel 1.5. Amazon's trying to go green. Microsoft trying to go green. Google trying to go green. Russell's going to stay red. Coin's only down 5.9 now. Tesla still down about 1.5%, giving up that hope to go green. Affirm still trying to push. Zim's still going down. Enphase down 4.5% now in Enphase. Uh-oh. Shell. And another 4% on Rivian. Wow, it's a little rough start to the year there, huh? Oh well. All right. Let's see here. Stock sell-off may spare last year's laggards. Ooh, the suits. Tech mega caps among the biggest 23 outperformers lagged Tuesday due to an Apple downgrade. Big tech companies may have trouble sustaining last year's rally amid valuation concerns, but small caps, which underperformed the broader stock market index, fell less than half as much as the NASDAQ 100. Yeah, that's true. Less pain in the smalls. However, they can certainly be a lot more pained very quickly. So there's obviously a risk to being too exposed to smalls. But anyway, today looks to be another tough day for equities, with major benchmarks opening lower across the board. But bargains, may still be had for investors looking beyond tech, especially in this week's jobs and ISM manufacturing data. You know, I find it very difficult to argue for buying stocks as you're going into these data releases. Like, what fund manager is like, yes, let's deploy all of our capital right before JOLTS, jobs report, CPI, Fed meeting, earnings. The pile of catalysts that say don't buy anything right now as you wait for data are so high. Why take the risk and gamble? So I think that's probably why you're seeing some of these movements. Look at Carnival. Wow, fully off that 1968 longer term line here. Full rejection right here. Yeah, and that's a big line right here. I think if Carnival can break that 1968 level, it's a very big deal for Carnival stock. But as you can see here, they could not. They were not able to achieve the breakage, unfortunately. Nike. Here's Nike. Over time. Sitting, frankly, what looks to be like a longer term support level over here. This approximately 102 level. It's getting there. No, I actually will probably put a line there. Look at that. I want some TA. Draw a line on Nike at like 102. Come on. Horizontal line. There we go. Yeah, somewhere right around there. It's not perfect, but it looks pretty good. I mean, look at that. Support, you bob around, support. As soon as you break it, you plummet. You sit on it. You bounce off of it. You bounce, you bounce. You break through, then get rejected, which leads to a larger sell-off. Once you actually break through, you get a larger gain. And of course, as you get bad data, you're almost right back to it. That's a pretty strong line. Again, not exactly perfect, but somewhere around 102. It's a pretty strong line there for the Nikes. Ooh, Tesla now down 2.6%. 2.6% following was a deliveries beat. A lot of people waiting for that data coming out. Bonds over 4% again on the 10-year. Holy smokers. Santa came and went. Goodbye, says Santa Claus. Kevin might have a coupon for you, but Christmas is over. Thank you, by the way, to all those of you who emailed us for bundles at staff@meetkevin.com. And thanks for putting up with how long it took to get back to you. There were so many emails. Okay, let's see BTC in the meantime, and then we'll get some more research here. No, still sitting on that line here. 42. All right, very well. So let's see what other research we have. So we have Goldman Sachs. Yeah, there's a lot of talk this morning about how less people are applying for mortgages, even though mortgage rates plunged. 12-month price target for Goldman Sachs on Tesla is $235. Valuation expansion drove a 26% return on the S&P 500 in 2023. Well, that was like, they're saying all of it, basically. Yeah, that's all of it. Dovish Fed messaging gave way to a sharp decline in bond yields. S&P rally stopped short of an all-time high. And I mean, look at the SPY. It looks like a broke all-time high, but okay. Nah, it's not too entertaining. Bitcoin and tech performed well last year. Fun. Trying to get some other research here. Bank of America. U.S. labor employment preview. The catch-up effect has lags. For December, we forecast non-farm payroll at 175. Well, that's with consensus. That's also boring. Everybody's at consensus. We expect non-farm hiring to be driven in part by the ongoing strength in the government sector. And remember, that's pretty late cycle. You know, when you get government and healthcare spending, both of those are deemed to be late cycle. Here's a shout out to Ryan Powell, who has this picture of them, you know, looking at a sunset in Arizona or whatever. But anyway, get wrecked, greedy bulls, and then frantically spamming about 20 different laughing emojis. You know, it almost makes me suspect Ryan might be short and cheering your misery. Ooh, dirty. Okay, let's see. Average wage or average hourly earnings likely advanced 0.3% in December, decelerating slightly from 0.4% in the month earlier. Income growth remains supportive of consumption. Expect our average hourly earnings to sit around 34.3%, plus or minus a tenth. Participation rate is expected by Bank of America to hold at 62.8. Positive cycle to offset the negative demographics. However, it is below its pre-pandemic level of 63.3. Yes, by about 0.5%. Which is a lot. I mean, 0.5%, by the way. I know sometimes we don't think like, oh, 0.5% is not much. But multiply that by the labor force of 158 million. You know, that's 7.9. Let's see here. To put the comma in the right place. 790,000 jobs. It's a lot. 790,000 jobs just by seeing a 0.5 percentage point move in the unemployment rate. Or in the participation rate, rather. 790,000 divided by the trend of about 175,000 jobs we create per month. It's about 4.5 months of labor data solely because of the participation rate being down 0.5%. Wow. Yeah. Very interesting. All right. What else here? NASDAQ is trying to recover. Coinbase recovering. Look at that Coinbase recovery. Now, keep in mind, it was just dropping on rumors that the BTC ETF would not be approved. You actually have Bloomberg analysts who have come out and suggested that, quote, we have received no indications suggesting anything other than approval. That is from Eric Balkunis, who does not seem to be bearish at all. Yeah, I have not seen anything either that would imply the SEC wants to punt this, although they just love screwing with people in crypto. Yeah. Tesla down 2.5. Looks like it's getting stuck at about 2.5 down. Affirm down 3. Coinbase down 3.8. SoFi. Oh, bro. 9% to the downside. And it's about to lose our, what is this, the 879 level here? Ay. Zoom out on that. Oof. Look at the fibbies at play again. Oh, but technical analysis is just juju. There it is. Full reject at 1021. Right back down to the prior fibbies. S-Box actually green by about 10 basis points. NASDAQ still trying to recover. Only down about 52 basis points right now. And phase down about 4%. Pretty big move there. NVIDIA, honestly, not that far off in between its 100-day moving average and its resistance level there. It's really compressing. Look at this. In fact, let's draw this out because we drew this previously. Let's try to keep roughly the same slope here. Look at NVIDIA compress right here. I think this is a big technical moment where when NVIDIA has a problem staying below this trend line. You know, it briefly did here. It didn't last. Your 200-day moving average is obviously catching up. But I think you get, you know, I think you're floored on NVIDIA somewhere around 453. And if you break that 493 level, could be juiced to the upside. This could be the calm before the rally. Who knows? That's maybe a too bullish of a thing to say. Trade Desk, on the other hand, has this negative downtrend. And it's also sitting at a fibby right here. So I'm watching that one. We're also about 16 minutes away, by the way, from data. That includes the JOLTS data release. Yeah, so we'll be covering JOLTS and then, of course, ISM prices paid. So we'll cover that live as it comes out. I think that'll give the market some direction today. NVIDIA actually barely down today, and so is Apple. I mean, 36 basis points, big deal. Okay. So let's go with, let's see, yeah, it's SoFi, Rocket, SunPower, Enphase, Robinhood, Coinbase, Peloton, Bill.com, Affirm, Tesla. Tesla's almost down. Full 3% there on Tesla after those numbers. Wow. Pricing in the whole earnings release, I guess. To the downside. Yeah, all right. Let's see what else is being said by Suits. And again, data coming out in 15 minutes now.
Not change. We do have things like gasoline you mentioned. It's like, bullish, but it's still hard to find people to work in some places. But I don't know. Let's watch JOLTS. Let's watch everything, because I just think that this notion of the 3 to 4 rate cuts. I'm not saying we're going to get 3 to 4 rate hikes, but the notion of 3 to 4 rate cuts is now what people are looking at, and they could be disappointed, and that's where sell-off occurs.
Right. Well, we'll get the Fed minutes today, and we'll find out to what degree there was pushback.
That is scheduled, by the way. I have that live stream already scheduled. If you want just a convenient place, remember my research, I throw it up on ehack.com. But if you want a convenient place, I did this just because I thought it might be a little easier. I put all the live streams right here, and you can kind of click to set reminders on them. So you've got the JOLTS and Stock Market Open Live, the FOMC Minutes, and the Meet Kevin and Mikey podcast. So all the links for that are there. So we'll be obviously live for those things. Okay, good. So Coinbase miners, yeah, okay, down on the Coinbase or the Bitcoin ETF rumor, fine. We've got, let's see what else we have here. We've got, Disney to cooperate with Value Act and bid to counter Nelson. Okay, boring. SoftBank, don't care. Roku launches first high-end TVs in search of revenue growth. Bro, there's no money to be made in making the TVs. They literally are making like loss leaders to sell their software, to sell their ads. Roku, the maker of TV streaming boxes and software, is debuting its first high-end TVs in a bid to continue sales momentum for the company's devices. They're rolling out 55, 65, and 75-inch Pro Series TVs that'll cost as much as $1,500. Rip. Why would I pay $1,500 for a 75-inch TV from Roku? I wouldn't. You know why? Because I would just go to Amazon and get one for like $6.99, if that. 75-inch TV. Okay, 75-inch TV. Bro. How is this not deflation? Yeah, it's so cheap. Why, Roku? Because y'all dumb? I don't know, I think getting into TV is just stupid. But look at this. Okay. 75-inch 4K TV. Oh, Scott, stop being a downer. I know I'm not exactly comparing apples to apples. Yes, what this one reaches out and like gives you a little handy or something. Come on, man. It's not worth an extra $1,000, bro. It's not worth an extra $1,000. It's stupid. That's my point. Like, it doesn't do that much more. When you're at $549 for a 4K 75-inch TCL smart TV, Dolby, Apple Play, Alexa, all built in. Why the hell am I going to pay $1,500 for some Roku TV? I ain't. Come on. Come on. Roku's a ripoff. Roku. Now we're going to go to their investor relations and let's tear them apart. Maybe I'll be impressed. Oh my gosh. Don't even start with the OLED bullshit. Nobody can tell the difference. And now I'm going to get a bunch of comments. I can. Yes. The only people who could tell a difference between OLED and not are the people who spent the money on OLED. And then you have to be able to tell the difference to make yourself feel better. Come on. Okay, so let's look at Roku's money. Money. Oh my God, it's worse than I expected. Holy crap. How could you be... Oh my God. No. How? Come on, man. This is bullcrap. Bro, do you know how many hate videos people would make of me if I ran a company and lost $350 million in 3 months? Oh, bro, they're literally losing more than $1 million a day. Oh my God. They are losing money on their TVs. Look at this. Devices, $125 million in revenue. Cost, $134 million. Oh, lordy. Lordy. Why? Dude, their sales and marketing is up. What? Their sales and marketing is up 50%. A 50% increase in sales and marketing. What's their revenue up? How much is that extra 50% helping you? 17.8% in platform revenue. Holy lordy. What the heck? What's their cash flow? It's got to be negative. Cash from operating activities. It is not. It's actually surprisingly positive. How do they pull that up? Oh, of course. Of course. Because in the 9-month period that they lost $631 million, they paid their employees out $277 million in stock. Oh, bro. No. It's terrible. It pisses me off. Okay. You added back in $235 million of asset impairments to go positive in cash flow. That's some bullcrap. Okay. Well, I mean, those losses weren't technically cash, so therefore, we are going to Adani the balance sheet. I don't know, man. This is ludicrous. So, do they actually make money on their platform? They do. They make they have $408 million of costs for their platform, which brings in $786 million. That's almost 50%. It's like 48% margin. That's not bad. I will say, their platform makes money. The problem is, bro, okay, first of all, how? Bro, how? I don't understand. What do you need $282 million for in 1 quarter? That's over $1 million a day for research and development at Roku. What are you researching? Oh, it's so painful. It's AI, bro. It's AI, bro. Oh, my. I don't understand. I just don't. Whatever. I gotta look. I gotta see what they explain is their R&D. So all I have to do is I have to go to their 10K, and we got data coming out in like 8 minutes here. But I'm gonna go to their 10K, and I'm gonna try to understand what their business is in R&D. All right. So, we pioneered streaming to the TV. Really? You know, like Apple TV's been around for like, when did Apple TV come out? Like 07? Apple TV. Because that to me, I mean, that sounds to me like it's been out a little longer. Oh! 07! No way! I nailed it! Wow, that's crazy. January 9th, 2007. Let's go. Oh, that's funny. Okay. What about Roku? How long have they been existed? I have no idea on that one. Oh, interesting. Okay, they were actually founded in 2002. All right. I'll give them that. They beat Apple TV. Okay. All right. Fine. Okay. So what else here? Our strategy is to be a global TV streaming platform. Yeah, I don't care. Okay. In 2022, we extended our ecosystem and launched new smart home products to build new services and revenue streams. Our smart home product offerings include cameras, video doorbells, plugs, lights, light strips, along with Roku smart home app for mobile, blah, blah, blah. Okay, all right, so they are expanding. Scale, trying to increase the number of accounts, the number of hours on it, the monetization, investment into growth, advertising innovation. Yeah, I'd rather be a trade desk than this. Research and development, here we go. Our R&D relies on a combination of in-house staff and outsourced design and manufacturing partners to cost-effectively, improve and enhance our platform. Like, them saying cost-effectively improve the platform is such smoke and mirrors. But anyway, cost-effectively improve and enhance our platform, develop new players, audio products, TVs, smart home devices, features, and functionality. That sounds like a lot of different things, but so far that sounds like speakers and TVs. We work closely with content publishers, advertisers, and licensed TV partners. Yeah, I understand that. We've designed a product development process that captures and integrates feedback. Yes, so what? So does everybody. That's it. Man, I don't know how they spend that much money on R&D, but whatever. That's Roku for you.
Where he's just invited to the board periodically and share information. He wants to be at the table, making important decisions, helping him make important decisions to try to get this total shareholder return. Likes Gorman, thinks Gorman's a great guy. Everyone thinks Gorman's a great guy, but it says, no, that's not.
Yeah, this is boring. Data releases in 4.5 minutes. Trust me, I need another cup of coffee, so... Oh, I have another little bit here left. Bottom of the cup. Oh, wow. Everything's tanking. Enphase down 5. Rivian's down 4.8. Tesla down 3.6%. Sell, sell, sell. Tank. Carnival down 3. Palantir down another 2. Bro, it's going to 15. Intuit down 1.57. I did say I wanted to sail on Intuit, but I didn't think it was going to make the entire market fall. How's Costco? Watch, Costco's going to be green. Son of a bitch. Costco's up 40 basis points. Coinbase is actually only down 2.8 or 3% now. That's not bad. Q's really sitting here at 66 basis points. And, yeah, now just waiting for some of the data. Yeah, somebody here writes, Santa has left the building. Stop. Disney is up 30 basis points. Walmart, Microsoft, Amazon, these guys up somewhere around 30 bips, but that's it. Otherwise, it is in the poopy doopies. SunPower, Rocket, 7%. 7%. Robinhood's down 4.6. Man, they's robbing the hood today. Woo! 3 minutes to go to data. All right. So let's see what else them suities are saying out here. Let's find out. Higher bond yields are the trend for now. Some of the best bond forecasters had expected a break in the year-end bond rally, with Treasury yields higher a 4th consecutive trading day. There are reasons that trend can hold. Traders are suggesting that the start of the year could be the building of fresh short sales across most sectors, especially those that performed well in 2023. Ooh. Traders coming back and loading up the shotgun. Yeah, okay, so you get it, because it's kind of like shotgun, but it's shotgun. Anyway, everything sell. Sell, sell, sell. Enjoy the pain and suffering of seeing money evaporate. All right, we've got about a minute and a half to data. We've got Ethereum down 5.7% on the 7-day, most of that occurring within the last 24 hours, with Ethereum down 7.2%, but it's only down to 2,200, which is not bad. Solana is down about 11.6% in the last 24 hours. That had a little bit of a wild rip. Avalanche, Cardano down 10%. Binance Coin is not moving basically at all. The last 24 hours is only down 92 basis points. But Obviously, that's because Binance is so great and that coin is not rigged at all. Meanwhile, TON, Link, Matic, TRX, DOT, all of these things are down quite a bit in order. 9%, 11%, 14%, 4.4 on TRX. Almost 12% there on Polkadot. All right, we are 40 seconds away from data. Let this tank the market even more. Let's go to the Qs. Dun, dun, dun. Dun, dun, dun. Here we go. Somebody in the comments wants to know what my thought is on some hater. Who gives a shit? All right, let's go to economic calendar. All right. We're going to get ISM manufacturing, prices paid. Prices paid, we're looking for 49.5. JOLTS number, 8.82. And we got price, okay, JOLTS comes in at 8.79. Basically at expectations. Prices paid, way lower. Let's go. That's really, really, really good. ISM prices paid. Oh, it's great. It's great. I love it. It's fantastic. ISM prices paid, 49.5 was the expectation. Comes in at 45.2. Bro, it comes in that's so low. That is a huge miss. No, nobody knows miss better than I do. Huge miss on the ISM prices paid. 45.2 versus the 49.5 expected. But ISM manufacturing data comes in stronger than expected. You were looking for 47.1, comes in at 47.4. Let's go. I mean, that's best case scenario, right? Stronger economy, weaker inflation. Let's go! ISM employment comes in at 48.1. Thank God. Okay, that's what you want. That's what we want. We do not want employment to miss. That would be very, very bad for like recession, and then you really get dirty, okay? Oh, interesting. JOLTS revision. JOLTS revision comes in, bringing up the last data just a smidgen of 122,000 or 121,000. 8.852. So that's 8.8 million. On the revision, that's up from 8.7 million. That's a nominal revision, though. You know, I mean, what's 121,000 divided by 8852? You're looking at a 1.3% revision. That's super nominal. That doesn't matter. And so you have an at expectations JOLTS number, way low on the ISM prices paid. That is sexy. I like that. Let's look and see if we can get ISM prices paid. Remember, I'll be live at 11 a.m. for the FOMC minutes. I encourage you to be there for that. I think that's a big deal. So stay tuned for that. But let's see if we can get the actual ISM numbers here. So if I get the... I want to get the actual release, if we could get a little bit more here. No. Okay, fine. No, the suits haven't said anything. Let's listen in here for a moment. This guy's always angry. Let's listen to him.
Current read, the lightest read going back, well, to March of 21. Let's call it a little more than 2.5 years. All right, now the ISMs, the PMIs from ISM, and believe me, my kingdom for a 50, everything continues to be below 50. So ISM manufacturing, most likely manufacturing in a recession, although some of the numbers in areas have improved, 47.4. It's a bit better than expectations, and it's a bit better than 46.7 in the rearview mirror. However, it's still the 14th, the 14th number under 50. Prices paid, 45.2. That's the 8th month under 50 in a row. 48.1 unemployment. And even though that is better than the rearview mirror, better than expectations, it's still the third number in a row under 50, and it represents 8 out of 12 under 50. Now, let's go to the new orders component, 47.1. That is less than expectations, less than the rearview mirror, and represents, get this, the 16th number in a row, 16th month in a row under 50. The last time it was 50 or higher was August of 22. So we interest rates after reaching 4% in a 10-year has now dropped back down to 396. And it is trying to divine the difference between Fed easings, how many, and a slowing of the U.S. economy. Leslie, back to you.
Okay, the prices index dropped further into decreasing territory, signifying soft energy markets offset by increases in steel and aluminum. Wow. Everything's in the poopers. Rate of change. 8-month trend of prices decreasing, and the rate of change is accelerating. So faster decreases in price. Rip. Trying to get a little bit more here on. And then we got employment. Well, we saw that was better than expected. Prices. ISM prices indicating raw material prices have decreased in December for the 8th month. The index has been in contraction since May, and a lower reading compared to November indicated a faster rate of price decreases. Panelist comments indicate that buyers and suppliers continue to negotiate price levels for 2024, with commodity markets remaining highly volatile. Recent decreases in energy markets have been offset by increases in the steel markets. One of the top 6 manufacturing industries that is heavily steel dependent, machinery, for the second month in a row, reported price increases in December. I wonder how much. 86% of panelists' companies reported the same or lower prices compared to 84% in November. Wow. Same or lower is basically like you have disinflation. Prices index over time. Oh, wow. Usually a prices index of 52.9 is consistent with long-term inflation. And we're at 45.2. We're going into deflation. That's like, this is a deflation report. Bloody, 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 bloody. Wow. Interesting ISM report. Very, very interesting. Okay, cool. We're going to head over. I'm going to make another coffee, and then we'll go to a course member live stream. Thank you so much. Appreciate y'all being here. Love y'all. Oh, I got to press this button. Let's watch this while we look at some sticks. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Ooh, I like where Restoration Hardware is going. And the pooper!